again, I welcome to all for this wonderful session. Today we have a new face faculty, T.R Srinivasan sir from Chennai. I have a brief introduction to us before I welcome him. He is a fellow member. He almost practiced more than a decade. He is an all India rank holder in ICAI examination and also college first rank and gold medalist in BCom. He is in partner NV Balaji and Co Chartered Accountants Chennai. He especially specialized in heads in their GST and risk advisory divisions. He is a member study group for implementation of GST ICAI, certified trainer of NACE and Government of India for GST, faculty on the subject of indirect taxation and financial reporting for the past 10 years, trained more than 5,000 officers of income tax and GST departments as a visiting faculty at the regional training institutes and the Comptroller and Audit General of India, that is C&AG, trained more than 10,000 financial professionals as well as the students. He is a speaker at various trade association, chamber of commerce, and leading colleges, and reached more than 20,000 people as a part of their trade outreach programs. And also, he is a speaker and a contribution of leading news dailies and the television channels. So and so, he is a member of editorial board of books published for professionals and students. He addresses various schools and colleges as a commerce as a challenging career option. Speaker at the continuing professional education CPE for SIRC of ICAI in the corporate governance, Companies Act and independent audit. He is also visiting speakers at the Tamil Nadu Chamber of Commerce, Madras Chamber of Commerce, Young Entrepreneur School, and other business forums. In these few words, I welcome today's session speaker, T.R Srinivasan sir. Welcome, sir. Welcome to our session.
Thank you, sir.
Floor is yours, sir.
Thank you so much, sir, for the invite as well as the introduction. And of course, it's in the last few days, there have been always talks on whether GST audit will be extended or not. So we might have, and for sure that there will be an extension because of the. We had a interaction here at the commission level, and of course there is an expectation of the extension from the government side. So that is the first issue, is the major issue which we have on that particular question which we might have. So that is most likely done, because not many industries are yet to resume their office. Yeah. So I think my lighting, they were not interesting.
Sorry, sir. Sorry for the interruption. In case you have any bandwidth problem, means kindly mute your video, sir. That is better thing.
So maybe the visibility at my level is
okay, sir. You are right now visible, sir. There is no issue, sir. It is clear.
Yeah. Fine.
If you feel your side bandwidth is very low, means kindly mute your audio video, sir. Stop your video.
Sure.
It will match point, sir. It's better thing.
Fine. Yeah.
Fine,
so as of now, am I audible, right? Am I audible and visible?
Audible, sir. Audible and also visible. No issue, sir.
Okay. Yeah. So let us directly move on to the session. So first thing, we can have more of an interaction. So because there are members, both senior, junior, everybody is there as part of this forum. So let us start with directly. In fact, we are now doing the second year audit. So already most of us would have had the experience year 17-18 audit. Somehow, some of us would have filed it effectively well. Some of us might have somehow pushed it. All things would have happened. But again, based on my personal experience, which we had quite recently, because we are trainers for the department offices also. And we had a recent training for the officer for about 300 audit officers of the department just a few weeks back. So one of the major thing which they are relying on is the GSTR 9C, which we have filed. There is a major information which they are relying on. In fact, in one case where which we recently concluded, the GST audit, department audit itself is also concluded for them, in addition to the GST audit conducted by us. So in such case, in fact, they have been clear in referring to each and every observation which we are mentioning in the GSTR 9C, and they are also inquiring or checking with the assessee what is the remedial action they have taken for it. For example, there was one instance where we have said there is a 79 lakhs reversal has to be done. So the question is, they don't stop there, but rather they ask that whether the 79 lakhs reversal has actually been done or not, number one. Second question they ask is, give me the breakup for this. What is the number? It means what our audit documentation is not only kind of, though it is our property, it's our information. Naturally, the breakup of that information will be available with the client. So the client in a way will be required to furnish the breakup of that information to the department also. So it's all the more important that the information give in 9C is very important, very valid, and also has a proper backup papers. Okay. So because in fact, there are some points which department itself which was available in the audit report. And finally, they found out that in audit report, and they had checked with the taxpayer whether they had paid the tax. The idea of our 9C especially is assuming greater importance because of the reason that number one, GST is a new law, and still many officers also, though on the other side taxpayers also still new, officers are very much new, especially because they are doing the audit for the first year. So now taxpayers have sailed through for 3 years. For as regards officer is concerned, the first. So because of this, our 9C becomes a very major source of information, and also major source of for the department also. It's very important. So what I'm saying is, don't, one, of course, we should not hide anything. It's very important. But at the same time, we have to give the information or qualifications in the right manner. Okay. So in this regard, the first question to all of us, in fact, there is always a issue which is there, is the first point, because there is always a contradictory points in GSTR 9C. Some points say that you just give information. Some points, if you read those points, it will look like you have to give your suggestion also. There are some points where it says you reconcile. There are some points which says you don't only reconcile, but rather you also give your inputs on that, basically technical inputs. For example, if you look at the first heading, which is related to turnover, it was more related to reconciliation. Okay, it's very simple. You have to define out the difference. That's all. You are not required to say whether it is liable or not, whether it will be deemed or not. So all those things you are not required to do. You are just only required to reconcile. Whereas if you look at another heading related to input tax credit, somewhere in the expense wise reconciliation, it will ask for eligible input tax credit. So the question that arises is whether it means eligible as per our understanding, or eligible as reported by the taxpayer. So that is the issue which comes on. So sometimes it's quite important that we need to know where we need to draw the Lakshman Rekha, where we have to draw our line and say beyond this I will not go. So that is the first thing which we have to kind of take care in our audit, is where is that we should draw a line. Because some cases, what happened in one of our cases, out of excitement, we qualify additional information. When I say not qualify, but rather it was informed in the report. But the point which comes in is interest. What about the interest part? Because you are qualifying some information, whether just a minute. So the point is where we have to draw our line is a question which we need to understand. Okay. So our first question is, because there seems conflict what the government is expecting versus what the CA Institute guideline has been. Okay, the ICAI has prescribed a technical guide. I'm sure most of us would have seen a technical guide given by CA Institute. Of course, it was published late last year, mid of last year, and the government has given a press release. Okay, on what is that a CA is expected to do. Okay, so now my question is, maybe you can also answer, what is the role of a CA? For example, let's say you are identifying that there is a deemed supply. Okay, let's say they have made a sale of UPS. Okay, which they exchanged UPS. Okay, this exchange of UPS, when this old UPS is given and new UPS is purchased. For the new UPS, they have taken input tax credit. For the old UPS they have given, it's deemed as a supply technically, because it becomes transfer of business asset, where originally ITC is taken. Now the question that arises is whether this deemed supply, or they supply to related party free of cost, whether this deemed supply should that be qualified by the auditor. Okay, let's say the taxpayer has not paid the tax on the sale. Should we report this in our GSTR 9C? Was the question. Let's say it was not taken care properly by the taxpayer. So the next question that arises is whether in 9C are we required to report this transaction? So, or we just ignore this transaction because it is not within our scope. I mean, so that is the question. The first question is, what is the role of the auditor as regards 9C? Maybe those of us who have your views and inputs, you can also share. So it will be useful for everybody. Anyways, I will share my perspective of things also. But having said that, what is the role of an auditor as regards? This is the first guideline which we need to keep in mind, because the CA Institute has given the technical guide where they have given one version, and the government has given the press release which gives a different version altogether. So what should be the mindset? Should the mindset of the chartered accountant should be to identify deemed supplies, validate the law and say that these are all differences which is not reported. Okay, that is a reply, or just compare the GSTR 9 returns, which is on one side, GSTR 9 returns, and the books of accounts, and just say this is the difference, that's it. Okay, or if there is no difference, you are going to say there is no difference. Okay, what is the view of the auditor? What is the role of the auditor? Okay, so this is the first question which we have to answer it, because this will give to so many dilemmas for us, because there could be at one end client may not have paid GST. For example, let's say this UPS example, the taxpayer may not have paid the GST for the same. Okay, so as an auditor, your role would be what? To report this in GSTR 9C, or you inform the taxpayer. Let the taxpayer take a call whether he wants to report in 9 or not. Okay, let's say he's supposed to report in 9, and if he's reporting in 9, your matter also over. Let's say he says no, I will not report it in 9 because it is not my in my view it is not a supply. Let's say that's the taxpayer's view, or the client is saying I will take care when the department audit is coming. Right now, in such cases, what should be our role? Should we report this in 9C, or can we ignore this transaction? Can I have answers from your end? Of course, chat is possible. Maybe it can be, if it can be more interactive, it helps us a lot. So should the auditor validate from the legal perspective, or should the auditor just restrict themselves to reconciliation? Just see reconciliation and stop there. Don't go beyond that. That's not required for you. So this is the the first thing which we need to clarify on. Okay, maybe anybody you can give option A or option B. Which one do you think is correct? That is, you should validate the law or just validate the reconciliation. What is the role of the auditor? Can I have answers from your end? Maybe you can also type it in the chat box. So what could be the role of the auditor? Anyone? So if you look at the overall requirement of the law, okay, let's put down the law, what the law says, versus what the the government's view is, and also what the CA Institute's view is. Okay, because end of the day, we Institute Chartered Accountancy, that also we have to see. Okay, so what the law says, only the underlying points are relevant. So so option A. Okay, fine. So that is, you have to validate the law. That's option A. Option B is just reconcile. That's all. Okay, validate the reconciliation. Fine. So if you look at the law in the section 35, which the, yeah, reconciliation is enough. So we've got another answer. So it's basically option B. There is option B. So reconciliation is enough. You don't have to go beyond that. You don't have to validate whether the law is correct or not. So that is option B. So I've got two answers now. Anybody else also can support your answers. Maybe this one is slow, so it might take a little time to settle and identify. Yeah. So the point is that this is the law, and what is the government's view on that, right? So the law says, every registered person, except that I'm not getting into that, should get his accounts audited. Okay. So it means there is an audit to be conducted by a chartered. What the law says so. The section 35 says it should be audited by a chartered accountant, and he should submit a copy of the audited accounts, the reconciliation statement, and such other documents as called for. Okay. So though he conducts audit, okay, the audit has to be conducted by a chartered accountant, but as regards what they have to submit, it says you have to just submit the reconciliation statement. Audited accounts anyway, the taxpayer is going to submit. You are required to submit the reconciliation statement. So which means though the scope is audit, the format of is in the form of reconciliation statement. That's it. So that's the, and such other documents as called for. They were not called for other documents other than the such other documents could be cash flow statement, etc. if they ask for. Okay. So if you look at the scope, it is audit. But if you look at the presentation, it is reconciliation statement. Okay. So this is where the major confusion started coming in. Okay. So in fact, the CA Institute has gone in depth, and of course, if you look at section 44, which is also related to this section, it also says reconciliation statement should be filed. And in fact, section 44 is very clear. It says you file reconciliation statement, reconciling the value is declared in the return furnished for the financial year, which means for the financial year means we furnish for the financial year means GSTR 9, because annual return is what we furnish for the year, full year. Okay. With the audited annual statement, which means they are saying that you are required to reconcile the value declared, that is value declared in the returns versus value declared GSTR 9. When you say return here, it means GSTR 9, and with the annual returns, such other particulars as may be prescribed, and that's where you have GSTR 9C, where they have. In fact, one more doubt comes: should I even report on input tax credit, etc.? Where it says only you are required to reconcile and such other particulars which is asked for. Okay. So whether you're required to only submit this information. That's it. Right now, in this case, if you look at scope is audit, it is restricted to reconciliation by way of statement or the form. Now, when we say audit, because the word audit definition is there in the law itself. The law itself says what is audit. In fact, though it was used in the context of departmental audit, because it's a common word. So audit means you have to examine the records, you have to maintain all the other records that are maintained under any other law also. You have to verify the correctness of the turnover, taxes paid, refund claimed, inputs availed, etc., and assesses compliance with the provisions of the act. So if you look at the word audit, it covers everything. Basically, you are saying that you have to verify their entire correctness, not legal correctness, and not only the reconciliation correctness, but rather the entire correctness. So there is a seemingly conflict within the law itself, where one end they are saying you do the entire audit, whereas on the other end, in the report form, if you look at the report, it says only reconciliation. You are restricted to the reconciliation part of it. Then what about the other information? The other information is not called for as regards as part of the the GSTR 9C. So there is no option to disclose. So there seemingly seems to be a confusion in this point. So in this regard, that is where, of course, most of you, everybody will be aware of a press release given by the government. In fact, the CA Institute has taken the view, because the word audit is used, you have to do everything. It means CA Institute says you have to do legal validity of the entire transaction. That is, you should say, for example, if there's a deemed supply, if they have not raised bill, you have to disclose that. You have to report it. If they are disclosing in GSTR 9 itself, no problem, because it will not come in GSTR 9C, correct? Because reconciliation will not be there. If it is not coming in GSTR 9, then it is your responsibility to say that's an additional tax payable. This is for example, ITC taken. It is a wrong ITC taken, then it is a responsibility of the GSTR 9. You cannot reverse. Now, very interesting point. You cannot reverse ITC through GSTR 9. Okay. So, but in 9C, you are required the wrong ITC taken or ineligible ITC taken because of various reasons. Okay. So what the CA Institute's view is that you should do, but that's how the law looks like, because that's how the audit is. But if you look at the form, it is only more of a reconciliation form, and the press release from the government is very clear that it says that it is limited. It's very clearly they have told the auditor's role is limited to reconciling the values in annual return with the accounts of the taxpayer. That's all is the role of the auditor. So this is the role press releases told, though it is not having a binding effect because it is coming from the mouth of the GST, office, the government itself. Naturally, it has a propriety that it will stand valid. Okay, there is a clarity. It has been given. So it says that your requirement is only to limit yourself to the values declared in the annual return with the accounts of the taxpayer, and that is what you are required to certify. You are not required to go beyond that, is what the press release of the government says. Now, why I am talking about this point is you will always have a dilemma between what is wrong and right and how to disclose it in the 9C, because as I told you in one of the cases which we just recently concluded, the 9C data itself was taken as the base to do the audit by the department, and you will find this happening in every case. Now they will first start with 9C only and see what are the observations, any difference is reported. If there is a difference, what is the action they have taken on that, and that's how it's going to start. So your GST audit for 17-18 is not yet over, technically speaking. It means you should be again submitting all those information if called for during the departmental audit also. So we need to preserve those records from the auditor perspective for at least 16 for the next 6 assessment years. So though the department or assessee has to maintain the records, we will also be required to maintain the records for the next 6 assessment years, because that is what could be the expectation from the department also. So what they say effectively is only reconcile. So it means you are required to only reconcile. Now, about this point especially is you have to make the scope very clear, especially for the departmental auditors, because this is what we felt when we did the recent GST audit. When the department did the audit, they were assuming that everything will be done by CA itself, so the role is absolutely zero. Okay, so it is quite important that though it may be good in a very sarcastic way from the angle of the taxpayer, so he may assume that what we have done is correct, but he may expect everything to be done by us. Okay, but we have to make that scope very clear, that our scope is limited to only reconciliation of the values. And because of reconciliation, if there is a difference which is identified and that difference is not accepted by the taxpayer, but it gets reported here, then that difference they have to basically pay the GST on the same. So it's very limited scope as regards the press release is concerned. Though the law uses the word audit, the press release is limited. So this is something which we have to make it very clear to the department officers when they come for audit in day to day, as they come for audit in future. This is what we have felt it, and naturally you will also have this impact coming in this case. So to summarize, from the government's perspective, reconciliation alone is what they call for. Okay, so now why is this important now? Only reconciliation is enough. Then what's the point of doing this audit? Because that's where the more issues will come up. So when you say reconciliation, what is the base? And of course we assume books and the GSTR 9 as the base. Now please remember, we don't even take GSTR 1 and 3B. What is we have to take is basically GSTR 9 and books. That's what we take as the basis. Joe 1 and 3B is what will be the data pulled out to 9. You can modify the data and take the right information. So effectively what we need to take is the books data, or that's what annual financial, that's what law says, annual financial statements, the GSTR 9. So most likely, if the 95% cases, I'm sure that the auditors themselves may also help assist the taxpayer in preparing the GSTR 9 also. So most likely when the audit is being done for the books, naturally you may have to take care of other impacts also. Okay. Now there are some basic issues which comes in. So this is a role. So to make it very clear, our role doesn't go what we have mentioned in the law. Right. Of course, now wherever we feel there's a controversial points are there, have also been made optional. This is already there in last year, and that continues for 18-19 also. Okay, for 18-19 also, they have used the word true and fair instead of true and correct. Okay, so that's one. Of course, it's already been amended. It's not something new. And then wherever there is a question of validation of law has been made optional. Okay, what is meant by validation of law? For example, where you are required to check whether legally it is, that has been made optional. So let's just get an example of that 14 serial number, expense wise ITC reconciliation. Now this expense wise ITC reconciliation, we are supposed to say all expenses, how much is the ITC availed, how much is the eligible ITC. There's a column called eligible ITC, how much. Now when you say eligible ITC, is it the eligible ITC as per the financial statements, or is it the eligible ITC as per our understanding of the law? Was not clear. Though CA Institute has taken the view it should be as per our understanding of the law. This particular point has been made optional. Okay, so this is a dilemma situation where, for example, let's say taken credit on bus. Okay, the amendment has come from 2019 February, 1st February, that bus you can take input tax credit because it is more than 12 plus 1 passengers. But this has come only from 1st October 2019. What will happen to the period prior to that? So people have taken the view that it is not a cab, it is not a cab, so it is eligible. Some people have taken the view that it is not eligible. So there are issues on that part. So if the taxpayer has taken the credit and we are of the view it's not eligible, or let's say there are some advanced rulings which says that it is not eligible, we cannot go based on that and give our opinion there. So we have to stop there and not necessarily have to. This has been made optional. Serial number 14 has been made optional. The requirement to say some credit is eligible or not eligible has become irrelevant. I mean, at least we don't have to get into that. So we can stop ourselves with only reconciliation part. So that's the first thing which we need to clarify, especially when the department is coming for the audit based on this. Now, some of the points which becomes quite relevant context of GST R9 or 9C is that number one, is there or not? Okay, this is something which is I repeat, whether the department is bringing up this point. Yes, department has started looking into related parties, whether deemed supply is there or not, etc. It is always advisable that we check whether deemed supply, that is related parties, we are supplying goods or services, or we are supplying we are selling fixed assets where there is no consideration, etc. Whether GST has been properly discharged or not. Okay, that's the first question. Now the point is that how it is relevant to our audit. Of course, it is our responsibility to do audit. That's what the law says. Though the reporting is not coming out properly as an audit form, it is coming more of a reconciliation form. Our responsibility to audit lies. Okay, so even otherwise being servicing, it is our responsibility to advise. In such cases, naturally deemed supplies should have to be brought as part of GSTR 9 if he is accepting that the taxpayer has accepted to the fact that it's a deemed supply, then naturally it comes as part of GSTR 9 as along with other supplies. I mean, it comes part of the first serial number itself, where it talks about turnover of outward supplies. So it is also an outward supply. So that also should form part of the turnover, because this is where again the difference is coming. This is not there in the books, but naturally it is part of the GST returns. So the question that comes in is GSTR 9 data should be from where? Okay, can I have the next answer? GSTR 9 should have the data from where? Should it come from the books or should it come from the GST returns? Where we should take? Sir, is my voice audible now?
Now okay, sir. Now okay, sir. No issue.
Yeah. Okay. So the GSTR 9 data should flow from where? It's a very basic question. Whether it should flow from the GST returns or it should be taken from the books of accounts, or based on only these two are possible, either the GST returns or from books of accounts. So which should be the source for GSTR 9 annual returns? Yeah. So the first thing which the government has clarified through press release, the same press release in 2019 talks about it, and even our CA Institute has also talked about it, is that you have to report. They acknowledge the fact that there will be a difference. There will be a difference between GSTR 1, 3B and books. Okay. So what the GSTR 9 should report is the correct data. That's it. So whatever is the correct data you report. So as regards, let's say turnover is concerned, so there are two parts. One is the turnover part, the input tax credit part. Let's look at the turnover part. So as regards the turnover part, you have to report the correct data, sir. Okay. What is correct data? Correct data is not only from books, though books is the base because already it would have been audited. Books plus there are certain transactions outside of the books. For example, as I told you, deemed supplies is outside of the books. There could be some transactions which are not necessarily, for example, sale of capital goods. So where the accounting treatment is different, the GST treatment is different. So we are required to report as regards GSTR 9 is concerned. And please remember, GSTR 9 is the responsibility of the assessee. Okay, and naturally, in 90% cases, we are only going to file it, and we have the assessee. So it is the responsibility of the GSTR 9 filers to ensure correct data is reported. And the correct data is what should be as per books plus the transactions which are not reflected in the books, that also should be added and shown as part of it. Okay. Now, so it means what? The next question that comes in is, sir, what is the correct data? Okay. Whether books, as I told you, books plus adjustments because of deemed supplies, etc. Okay, and the government is the law itself making an assumption that you have to reconcile with annual audited financial statements. So the basic fundamental assumption they assume is financial statements are correct. Okay. Now, so the next question is, what if my financial statements itself has a mistake? For example, let's say I missed out one turnover, one invoice was missed out. It was identified only at later point in time, by which time the audit has already been over. I got to know this only during my GST audit, etc. In such cases, naturally, that will be reported as a prior period item in your financial statements. That's it. So if you put it simply, it will be a prior period item in the financial statements. So as regards your GST returns are concerned, it has to go correct. Okay. Invoice is raised, then naturally it will be part of the GST turnover. So correct data means it includes what is correct, not necessarily only from books, though books is assumed to be correct. If books itself you see that transactions are having errors, it's better you report the correct data as such. Naturally, that one or two sales which was missed out can be reported as a prior item in the next period of financial statements. Okay, that is the way we have to close it. Okay, so the first thing keep in mind is reporting correct data as regards GSTR 9 is concerned. So in that context, deemed supplies will be there. It has to be included in the turnover in GSTR 9. Whereas GSTR 9C, if you start, it starts from financial turnover only. So from financial turnover, naturally, there is a separate line item is there. If you look at GSTR 9C, a separate line item is there, which talks about deemed supplies. And naturally, that information has to be reported part of that separate heading, which is, there's a separate, you can see the column, the row here. This row specifically talks about under schedule 1. So this is basically assuming the fact that it will not be there in financials. So it should be added by way of schedule 1 here. So this is how it has been reported in this case. This is the first part clear about. So let's report the correct TR9. Okay, sir. The next question that comes in is, sometimes there could be last year, transactions that I might have disclosed in current year. That has happened in many cases. Okay, 17-18 turnover has been reported in 18 because there was a time it was allowed. But again, we are clear that information, though we reported in 18-19, it is not related to this period. Okay, so that particular point will not be, as regards GSTR 9 is concerned, it will not be considered as part of current year. It is part of the previous year. In fact, previous year itself, there was a separate column which talks about being reported in subsequent year. So we cannot again mix that in the current year. So purely restricted to 18-19. I'm talking about turnover on the income side. Purely restricted to the turnover which has been reported for this year. Okay, so previous year transactions should not be mixed. So which means in our 3B itself, we need to have a reconciliation of how much of that is related to 17-18, how much of that is related to 18-19. So this will be a unique, reconciliation which was not there in the previous year. So previous year, okay, first year transaction, we will only say it is reported in 18-19. Matter. Now in 18-19, we'll be requested to say that out of this 18-19 turnover, 17-18 turnover so much is included, 19 so much is included. Now please remember, this is very important. In 3B, what we are discussing is only cumulative number, overall amount. Nobody knows what is inside that. Okay, only the assessee knows, and the next best person to know is the auditor. Most cases it is the other way around. The auditor knows, the assessee himself may not know. Okay, because they are very busy doing their own business. So most likely only we will know that. So it's absolutely important, because now one of the questions which I asked, I'm just sharing out of our own experience in the departmental audit which was conducted. They're asking, so what is the this particular turnover includes that previous year turnover? So they're asking the evidence. Naturally, you cannot, you can only give a breakup. So this is where the documentation plays a role. Why I'm talking about is, let's say, if in the previous, in the current year, previous year turnover is included. It means what is the evidence? One is previous year, 9 will be there, option 1. Second is that we need to show 3B of that month, the breakup of the previous year turnover also, and evidence that. Now, this has to be kept immediately with us, because if that you are going to take enough time to, submit data to the department during the audit, then there will be a lot of doubts raised as to any kind of tampering being done. So what I'm talking about is the reconciliation has to be done two ways. Last year data included in current year, and of course naturally current year data included in next year. So that also has to be done. But in GSTR 9 and 9C, we are purely restricted to what is the turnover of this year. Previous year turnover is no way relevant for current year's GSTR 9C. We don't have to worry about it as regards our GSTR 9C is concerned, except in input credit. So I'm talking about the first part, which is related to the turnover. So as regards that part is concerned, we'll have to restrict ourselves to current year. So deemed supply is something which we'll have to advise. Now let's say, sir, the client has not accepted the deemed supply. He says we'll take care when the audit comes. In which case, am I supposed to report that in 9C? Not required. Because what is your scope? Your scope is only limited to reconciling between the financial statements and GSTR 9. Okay. In GSTR 9, if he has disclosed, this will arrive as a difference. GSTR 9 itself, he has not disclosed it. Naturally, there will not be any difference at all. Okay. You are not required to specifically add it and report it as a difference and say that deemed supply is not reported. So the law uses the word audit. The form, the reconciliation form, is very limited in scope as regards in fact, the press release is also very limited. As I say that you just reconcile. That's all is required to be done in this regard. In fact, the press release also clears an apprehension where it says where the auditors are required to do the complete re-audit of the books of account. Press release says no, it's not required. Okay, so the second one, another issue which comes in is place of supply. For example, it should have been CGST, SGST, sir. The assessee has charged IGST for this transaction. We again had faced this in one of the cases. What happened is we have paid, the assessee has, taxpayer has paid IGST, whereas he should have paid CGST, SGST for the transaction. Okay. So what is their view? Should we report it anywhere in our 9C? Do you think, does it require reporting in 9C as regards, let's say in their financials also they booked it as, they booked it as IGST, and the GST returns also they have accounted as IGST. But technically it should have been CGST, SGST based on place of supply. Okay. What is your position on that? Should I say in my audit report that no, I should pay CGST, SGST and not IGST, and then give my recommendation on that, say that you should pay this? So what is the position of the auditor as regards this is concerned, where there's a place of supply related issue? Any answers, please? Should we report it, or we have to require the taxpayer to update that in GSTR 9 and ask him to pay the taxes in GSTR 9 and don't have to disclose in GSTR 9C? So what should be the, let's say if he is not agreeing to that, he is not having money or reasons, what should be the view the auditor has to take in this regard? Any answers, please? Maybe you can say that. Report the place of supply issue in 9C or not? Simply put it. That's what is our question. Any answers, please? Because these are all some dilemmas which we also had faced as such. So again, the basic scope as per the department press release comes into play. Okay. In fact, our scope, if you look at this point, place of supply issue, it doesn't come in the serial number 5. It doesn't come in serial number 5 because it is morely related to turnover reconciliation. So this is more related to the tax part. Okay. So if you look at the tax part, it comes here in serial number 9. It talks about reconciliation of rate-wise liability and thereon. So how much is the rate-wise liability and amounts payable thereon is what has to be reported here. In fact, in 9, you have to say 5% how much, CGST, SGST how much. This is required to be mentioned. Okay. Now the question that came up was this just a mere copy paste of what the assessee has done in GST or 9, or is it that we have to report what is the correct taxes? Okay. So what would be your view? Is it that we have to report the correct taxes here, or is it just we have to just say reconciliation of the tax paid? Okay, so it talks about tax paid heading, but here it says reconciliation of rate wise liability and amount payable thereon. Okay, so what is your view on this? Anybody, you can share your points in this regard. You can also put it in the chat box. Should I report it or not? Okay, or let's say the assessee has paid 12% GST. Okay, whereas the departments, there are records which says it should be 18% GST. Okay, there are if it's an interpretational issue, is there next question, and you are of the view it should be 18%, but Baji of the view it's only 12%. We have had situations like that where there are conflicts. When you say conflict, it means some kind of a difficulty, what, because earlier we if you look at income tax audit, it is very limited scope. We don't go and calculate what is the income tax. I mean, we just report on those points, specific observations. Whereas here we go ahead and calculate what is the tax also and what is the turnover also. Okay. So though audit is being done separately, the reporting here is like this. Okay. So anybody can share what is your view on this point. So here again, so whenever we have doubts, of course we have to go back and refer it to either the department's manual or to the CA Institute guidelines. Right. So here this talks about this comes under the heading of turnover. Okay. So under turnover we have reconciled the turnover. The next part they're asking is reconciliation of the tax, the gross tax basically, not the net tax, the gross tax which has been charged, and what is the tax rate wise liability and amount payable under each heading. So CGST, SGST, IGST, etc. on both RCM. In fact, they are also asking for interest also in this regard, tax. Okay. So if you go ahead and read the press release, it just says your scope is only limited to reconciliation of the reconciliation alone. In fact, the liability which has been reported at later stages, if you look at the liability at later stages also, it will say that reasons for unreconciled payment of amount. Okay, you can see here unreconciled payment of amount. I will come to that unreconciled payment of amount. That also could be one point. Okay, the unreconciled, and of course total amount paid as declared in annual return, total amount to be paid as per tables above. Okay, so here what we are going to report, okay, is more of how much is the actual liability which is required to be paid. Okay, so which means what, if the GST are 9, so that's why we said there are certain contradictory headings. This is one of the heading where you are required to report what is the gross tax payable as it is required to be paid. Okay. Now, if there is a place of supply related issue, should that be reported or not? Next question. You should have paid IGST. See, invoice itself, they have charged only CGST, IGST, not CGST, SGST. So the question is, reconciliation wise, there will not be any difference. Okay. Tax rate wise also, there is no difference. The difference comes in on the principal side. Now, it should not have been IGST or CGST, SGST, etc. In such cases, what should be done is the question that raised. Because I'll tell you, in one of the cases, we have reported that, where the case which we are talking about, we reported the difference, saying that it should be IGST and not CGST, SGST. That point, even the officer himself did not notice. Okay, the officer himself did not notice it, but of course, we have to report what is what. Okay, so we reported that as IGST payable, and of course, end of the day, they paid the IGST, which should not have been paid, which should have been actually CGST, SGST. Oh, sorry, they GST and paid it. Now, so now here the question is, it comes this particular area again. It comes out of reconciliation. Okay, and this reconciliation of this particular serial number of this is basically what they have reported in their GSTR 9 is what which is reported here. In fact, you can see the heading here, total amount to be paid as per tables above. So to be paid, naturally it means it calls for some level of judgment from your end. Okay, so that judgment requires whether it's only a legal judgment or it's only a reconciliation judgment is something which is not clear. So we have to take a conscious call based on the requirement. Yeah. So the question is that there could be two situations. Some situation could be where there could be excess payment. He has paid, let's say RCM higher percentage and not taken credit, or it could be a lesser percentage. Okay. In such cases, what the press release has clarified, and also which is what is accepted now, is that you report what should be the correct thing to be done. Okay, as I told you in GSTR 9, we report the correct thing to be done. Let's be very clear. We report the correct thing to be done. So if correct thing to be done, pays of supply should have been CGST, SGST. Let's say it's reported in GSTR 9 itself. Then you pay the correct tax. In fact, that's what the press release also says. And claim the wrong tax paid as refund. In fact, that's what section 77 of the GST law says. But though section 77 says that held later point in time. In fact, the section 77 says if you have paid CGST, SGST instead of IGST or the other way around, but it was held to be otherwise. Now, who should hold it? Whether it should be held by the taxpayer, or is it held by the department, or is it held by the authorities or the legal authorities, is not clear. Okay, so let's take the benefit of section 77, in which case there's a place of supply issue. GSTR 9 itself can capture it. The correct capturing can be done in GSTR 9 itself, though invoice is wrong, because we have to report what is correct. That's what the GSTR 9 should carry. So report the correct thing. Naturally, that will come to GSTR 9C also. And if you see in GSTR 9C, there will not be a difference if it is reported in GSTR 9, because what we are going to show between GSTR 9 and the correct rates. So you will not find any difference if it is reported already in GSTR 9 itself and claim that money as refund. Okay, so that's the right approach to do. In fact, that's what the press release suggests, and that's what we can be harmonized, and that's where the harmonization part comes in. So where the issue is, so in which case we are now traveling beyond what the reconciliation is being done. We are also validating the law. Here, validation of law is also being done, but again, that has to be done because GSTR 9 should carry that information, and this specific part talks about that particular clause. Okay, so that is something which is quite important for us to know in this regard. Right now, one of the sometimes last year tax the assessee might have paid in the current year. For example, last year's 3B amount, last year they may not have included in 3B, but they would have included. When I say last year, I mean 17-18. 17-18 3B they have not included, but they have included in 18-19. They have paid it. Option 1. Option 2 is that they might have missed out some taxes, so they paid it through DRC 3 challan. Okay, they paid it through that. Some income tax, income GST has not been paid, so they paid it separately through DRC 3 challan separately. So in such cases, what should we do? That's what comes in unreconciled payment of amount. Okay, where they paid for this year. Okay, where they paid for this year separately through DRC 3 challan. In such cases, that will be reported. So there will be unreconciled payment, because naturally it is not something part of this year. So it will, for example, there could be Tran 1 payment also. They could have paid Tran 1, or there could have been payments of last year, etc. That gets reported as part of the unreconciled payment of amount. It can't be reported as part of the previous year because this is exclusively, this is a domain of last 17, 18, 19 only. You can't report 17, 18 data in this. So whatever is related to other periods naturally have to flow into a payment of accounts, and of course that will have a reasoning also being given, and through which you can explain the case. Now, very important is this reasoning. In fact, if this reasoning is not given, you are just reporting under consent and you are not reporting the reason, it can become negative. Okay, especially at the departmental audit side, it becomes quite negative and averse, and especially if this they loses the credibility basically. So it's very important that every unreconciled amount has a supporting reasoning being given in this regard. Fine. So this is about another issue which we wanted to highlight. Now let me just look onto the next issue. Let's say there is an ITC ineligible issue and the reversal issues are there. So how do we report that? It's the next question that comes in. If something is ITC ineligible, okay, should we report? For example, the SSC has taken input tax credit on motor car. It is ineligible. So what do we do in that case? What should be the closure? Of course, you might have seen this already, but again, in GSTR 9C, how do we deal with that case? Should I report that ITC is ineligible? So let me just tell you that we talk about ITC in two important segments, two important numbers. In fact, I'll just quickly move on to that. So if there is an ITC ineligible, it is being reported here in table 12. Okay, and as I told you earlier, there have been it has table 12B and 12C has been made optional. Okay, that means ITC availed in the financial statements, you have to say ITC booked in earlier financial year, claimed in current financial year, booked in current financial year, next year, this is optional. Please remember, though this option was given last year, that is applicable for 18-19 also. That's what the notification says. So which means B and C are optional. Okay, in which case, this effectively this entire 12 will have a difference. Okay, and because it has been made optional, it's not a compulsory field to be given. In fact, only if you give this 19 data might be correct, because we would have taken some GST input tax credit which was not considered in books. It might be other way, 2A it would have been there, so you might have taken in 2A, it might have been there, so you might have taken that, and then later you might have brought it into books, in which case 17-18 input tax credit you would have taken in 18-19. Whether should I report it here? That's the question. The answer is it is optional. If you want, you report it. If you don't want this, so if 12B and 12C is optional, naturally the entire serial number becomes optional, because everything will fall under unreconciled ITC. So you are technically not required to report that number here. Okay, so 12 is optional. 14 has been made fully optional. In fact, 14 has been fully made optional. This is where we talk about amount of eligible ITC availed. Seemingly, it looks like our legal validation. Okay, but this is also optional. Okay, this particular entire thing is optional. So which means there also we don't report anything. Let's say we are not reporting it. Okay, so in which case we come to the point 5. Auditor's recommendation on additional liability due to non-reconciliation is what has been reported here. So if it is due to non-reconciliation, let's say input tax credit somebody has taken, in books itself it is not there. Okay, and nowhere it is found. Okay. In which case it is non-reconciliation. Now the next question is, if wrong ITC, should I report it? So what's your answer? Should I report the wrong ITC taken? Anybody can suggest? So SSC has taken wrong ITC. What should we do in that regard? Okay. So when I say wrong ITC, two ways of wrong ITC is there. One is procedurally wrong. It means he did not have invoice. It was not there at all, but he has taken the credit. Okay, that is definitely, that will be found out in your reconciliation itself. It will be identified through your reconciliation process. Books it is not there, 3B alone it is there, and you don't find that invoice anywhere. In future also it is not there. Nowhere you find out. So there is procedurally not violation. The second type of violation is where ineligible credit. Okay, so if ineligible credit they have taken, where do you think you have to report? Okay, that's the next question. So ineligible credit by way of legal law. For example, food, you are not eligible to take credit, but he has taken. Motor car, not eligible. So there are two ways of ineligibility. Procedural ineligibility, which is because of reconciliation process. You have to definitely report it here. Absolutely no problem. You have to. Now the other part where it is a legally you are of the view by interpretation it is not eligible. Where do you think you have to report this? Anybody can say, where will you report this? Can I report in GSTR 9, sir? No. GSTR 9 as regards input tax credit is concerned will talk about only what has already done. Okay, it will not talk about what is to be done. Okay, so can I report the actual, credit to be taken in my GSTR 9? That's the next question that may come. Let's look at 9C first. In 9C, where will you report? Let's say the assessee is saying, okay, sir, I will reverse. The assessee says, I will take the responsibility, sir, I will reverse it. Okay, and you know that very well that IDC cannot be reversed through GSTR 9. Okay, you cannot reverse anything through GSTR 9. GSTR 9 is just a paper which has been submitted to the department with information filled, but nowhere we reverse it. Okay, so it done only through either through DRC03 form. Only through that you can reverse. In fact, that's what this suggestion is, to clearly identify. So if last year reversal has to be done, it can be done only through DRC03 form. Okay. In such case, when the reversal can be done only through DRC03 form, where do you think you will report? So GSTR 9 you cannot reverse. In 9C, if you want to reverse it, you want to report it, where will you report? It's a question that comes in. Okay, so if you see, look at auditor's recommendation, even that heading, it talks about due to non-reconciliation, and of course, and that's where you have the input tax credit also comes in here. And this input tax credit information is basically flowing from the previous points, which is basically books versus 3B reconciliation, which is now being eliminated, which is not required now. It's not, I mean, it's optional. I will not say eliminated. And even this also has become largely optional. There is no requirement that you have to report B and C. So in such cases, still there could be some differences. So what we are trying to say is, if there is a legal ineligibility, if something is saying legal ineligibility, so we look at the next point. For example, any other amount paid for supplies not included in annual returns. Okay, so this also talks about only any other amount paid for supplies not included in annual return. So this is basically could be where we are deriving, as I told you, place of supply issues, etc. Okay, this is also any other amount paid. So I don't. It's not even talking about tax. It could be a penalty. I mean, that is also mentioned there. It could be a redemption fine. So it is basically something which is residuary category. So you can't talk about that there. So in such cases, what will be our role? Okay, should I go and say we have to report? Okay, so one answer we have got, yes, we have to report it. The question is, where will I report? It's the next question. If I report it here, auditor's recommendation on liability due to non-reconciliation, then the reason is it's actually not non-reconciliation. It is actually because of legal ineligibility. Okay, so this is where the dilemma again will fit in. So in such cases, the best thing to do is to reverse it through DRC 03. I mean, that's what we can do it. Okay, it has to be done through DRC 03. And the information of DRC 03, because it is reversed in the current year, we are now in financial year 2021. It is reversed in 2021. Naturally, 2021's financial 9C, where you will have to report it as other payments, unreconciled payments. So it will be reported only under other unreconciled payments, that too only in 9C of financial year 2021. But as regards the last year is concerned, there is no option to report technically in the form. Okay, because though we are doing a legal validation, though we are telling the taxpayer you have to reverse it, the requirement to report here is very limited. That's what we again have to go back to the press release. The requirement is very, very limited as regards GSTR 9C is concerned. You can do the calculations, but reporting will be done only through DRC 03. So you have to pay it. And here only non-reconciliation differences will be reported in this case. Let me give one more example in this regard. The ITC ineligibility may also flow from, let's say I look at point number 8, non-payment within 180 days. The taxpayer has not paid the invoice within 180 days. Because of that also the ITC ineligibility may come. Okay. In such cases, the first, where should we report it? Is the next question that will arise. So when you do the audit, definitely this point has to be seen. But when it comes to reporting, where will we report? That's the question we are looking at in this case. So unfortunately, the form under the essence of audit is not fully captured. In fact, if they want to capture it, and if they do that, then it becomes more complex, at least in the initial stages. So can you tell me, where will you report non-payment within 180 days? So you have to reverse input tax credit. and it continues to be not paid. So where will you report this particular information? So again, this is also ineligible ITC as on that. Okay. So where will be the question of ineligibility? Is the next question that will arise. Sometimes what could happen is that on what date that 180 days will you take? Okay, should I take it as on 31st March 2019 because that is a year ending? So should I say on 31st March 19 is there any bills outstanding for more than 180 days? Number one, or should I see as on today's date, as on the day on which I am doing? I mean, basically we have to do back work, correct? I should find out. So there could be a lot of bills outstanding as on 31st March 19, more than 6 months. But if you look at the same bills on today's date, on the date of audit, they might have got settled. Okay. So the question is, we should see 31st March 2019, or there will be some bills outstanding. Let's say there are 10 bills outstanding as on 31st March 2019. If you look at today's date, there could, for that period, if you look at today's date, there could be 20 bills outstanding. Okay, so what I am trying to say is, yes, 180 days is from the date of invoice, that is accepted, but that is only if you look forward from the taxpayer angle. Okay, now we are doing audit backward. Okay, so when you're doing audit backward, so the question that comes in is, reversal has to be done, sir, correct, for more than 180 days. So you're now going to advise the taxpayers, or you need to reverse the ITC. Okay, so the question which we need to ask him as regards audit is concerned is, you have to reverse the ITC for invoices more than 180 days. Should we see from today, that is when I said today, the date of audit, backward 180 days and find out outstanding bills, or should I see 31st March 2019 as on that day and see backward 180 days and find out what are all the invoices outstanding more than 180 days? Because there could be only 10 bills outstanding as on March 31st, 2019. Maybe by today it could have become 20 bills, because it could be 3 months outstanding on March 19. It could have become more than 6 months outstanding today's date. Correct. So there could be a difference in the time period, because of which the 180 days issue might come in this regard. So before all these things, should I at all report it in my GSTR 9C? Okay, that's the first question. Whether should I report it in my GSTR 9? Yes, GSTR 9 in fact talks about this point specifically about 180 days condition. It is reported in GSTR 9. But again, if you look at GSTR 9, if you look at income side, it is more of a actual numbers, actual data is being reported for. If you look at the ITC side, if you look at the input tax credit side, this is where input tax credit side starts in GSTR 9. So here it says details of ITC availed during the financial year. It means actual fact. There is no correct here. It's only fact. What is done, we have to report. That's it. Okay. And then it talks about amount of ITC, transition credit, etc. So details of ITC reversed and ineligible ITC for the financial year. So details of ITC reversed for the financial year. It means already reversed. That's what we are talking about. So for the financial year, what are all we are reversed? Rule 37, 39. In fact, one of the rule talks about 180 days condition. Okay. So what has been already reversed gets reported here. Okay. Other ITC information. Again, there's a reconciliation between 2A versus 3B. But again, this for 1819, even if there's a difference, no problem, because you are not required to have in 2A to claim the credit. Even if it is not there in 2A, you can still take the credit. Okay, there is no issue on that. So as you can see here, what is reported as regards ITC is a fact, is a statement of fact. Okay, so if you want to take extra ITC, you can't take it here. You have to go to the 3B and take it. If you want to reverse the credit also, you cannot do here. It has to be done only through DRC 03. So effectively put it, what we are trying to say is that DRC, if I am not paid more than 180 days and taxpayer found out only at the time of audit, should I report in 9C? That's the first question. Second question, should it be reported in 9? Second question. Third question is, if both are not applicable, what do I do? That's the third question that will be applicable. Anybody, any answers for it? So where should I report? Should I report in 9C? Okay. The answer would be in 9C. Again, as regards ITC is concerned, as I told you, the reporting clause is only related to the differences arising due to non-reconciliation. Only because of non-reconciliation, if there is any differences there, only that has to be reported for. Okay. Any other legally required ITC differences, there is no option to report. You may do the audit. As regards audit, you may do that. But the reporting aspect, when it comes to reporting aspect, it is a responsibility of the taxpayer to reverse it through DRC 03. That's it. So he cannot report it in, we cannot report it in our GSTR 9C. Sir, should I disclose the interest part? Okay. I should pay interest, correct? So should I report the interest part of it? That's the question. Again, due to non-reconciliation, if there is a difference coming and that has to be paid, and that interest has to be discharged and that has to be reported for. This interest has to be the responsibility of the taxpayer. So should I report that in 9? 9 also talks about what has been already reversed. Okay. So it means this has to be done only through DRC 03 form and reported under other payments in our 9C. That's it. So that's a view which can be taken. So this is why I'm talking about again a point. Is a fundamental assumption that 9C is only a reconciliation statement. Reconciliation differences alone can be reported through 9C. So that's the point. Though we are doing audit, our responsibility to audit compliance with the law. As regards the reporting is concerned, it is largely limited. Okay. So can I be pulled out for not reporting in my 9C? You are not. You will not be, because your responsibility is not there. It's very limited scope. Though you will advise the assessee or taxpayer to pay the taxes, your reporting aspects is very limited to the extent of reporting only non-reconciliation items. That's it. So this is one point which we wanted to clear about. So the same thing. So what we're talking about, ITC, to put it short, if there is a legally ineligible, procedurally ineligible issue like reconciliation issue, report it. Legally ineligible issues, it is a responsibility of the taxpayer to discharge it through DRC 03 form. And reporting in 9C doesn't arise because of the reason that it is not specifically required to be reported, or you cannot report it also, because reconciliation, technically you will not have any differences. Right? Next one is on some of the specific issues we'll get in 1819, which was not there in 1780. Is in the context of reverse charge. Okay. So many companies or taxpayers have not paid reverse charge transactions. They found out later. Okay. So they paid it during the month, during 1819 period. So where should I report it? Is the next question. So what is your understanding? So where should we report this transaction? Again, there is an apparent conflict between the CA Institute's view and the government's view also on this point. But anyways, let me first understand your view. So ITC, let's leave the ITC. Let's look at first liability. So I am discharging the liability on reverse charge transactions. Where do you, should I qualify that in GSTR 9 or 9C? If there is a turnover, there is a reverse charge turnover, means we have to pay under RCM. Okay, there are some expenses where we have to pay under RCM. So this is not paid in 1780. Okay, and the assessee declared that in 1819 GST returns, or he has paid it through DRC 03 and taken the credit. So this payment of last year, but reporting in the current year, where we have to disclose. Any answer? Last year RCM liability declared in the current year. Should we, first question, should we report or not? That's the first question which comes in. Should we report in 9C? I'm limiting myself to 9C first. Yeah. Should we report it or not? Any answers? Yeah. So again, in this case, where the technically in GSTR 9, it is a turnover of the last year. Technically, GSTR 9 last year. Yeah. Okay. So technically, it is a turnover of the last year. That is, that inward supply turnover is for the last year. But we need to understand there are 2 points are there. One is where we have to disclose the last year RCM paid in the current year. Number one, there is only reporting side. Another side is, can I take input tax credit on the same? Okay. Can I take input tax credit? Let's say I found out this only after, because last year 17-18, the due date of taking credit was March 2019. Okay. Now you completed the audit by, let's say, February, because February was the due date, February 2020, 5th February 2020 only you completed the audit. And at that time you found out they have not paid reverse charge mechanism certain transactions for 17-18. Okay. So they paid it during February 2020. So the question that comes in is, can they take input tax credit for the GST they paid on February 2020? This one is legal issue. Another procedural issue is, how do we report it in 17-18 financial statement, I mean GST returns in 9 and 9C as well as in 19-20. So what is your view? First question is, can I take input tax? Let's sort out the legal issue, then we'll come to the disclosure issue. Technically, I have paid reverse charge of 17-18, let's say in 18-19 only, or even for that matter, I paid in 19-20. So when can we take the credit for the same? Can I take the, let's say the due date for taking credit was March 19. After that only I have paid that GST. Can I take input tax credit of that 17-18 transaction which I paid in let's say 19-20 only I paid it? So I can take the credit in financial year of payment. Okay. But the time limit for 17-18 is already over by March 19. Yeah, I paid it, let's say by April or May or June, whatever period. Can I still take the credit? In the old law, in service tax law, the eligibility to take the credit is based on payment challan, the challan which we have for paying the service tax. Okay. So whenever we pay, from that date, the time limit was actually 1 year in the old law, service tax law or even Senate credit rules, 1 year from the date of the invoice or challan. So whenever we pay, that is the date of challan. From that day, it is 1 year. That was the time. Okay. Whereas in GST, what is the time? What is the document for taking credit on the reverse charge? The eligible document to take the credit on reverse charge services is not challan. Okay, carefully noted, it is not the challan which we have, payment challan. It is a very important, which is very important for you to advise the clients also, is that the eligible document is only the self-tax invoice which has been raised. Okay. So it is not the underlying evidence is not the, but rather the underlying evidence is the self-tax invoice which has been available in this regard. Okay. So the underlying evidence is self-tax invoice. So whenever we are raising the invoice, that is the evidence. So in audit, departmental audit is one of the points that has been already raised, is the self-tax invoice, whether it is available or not. Okay, though we have not given much importance, honestly, on self-tax invoice, that is the invoice date. In fact, the law says 1 year, the time period counts from the date of document. The date of documents for us is self-tax invoice. Sir, can I raise a belated self-tax invoice? Next question. 17-18 reverse charge, I paid it only by, let's say, 19-20. So I am raising the self-tax invoice itself only in 19-20. Can I do that? Technically, we are violating the time for issuing the invoice, which is normally 30 days for services. And even for self-tax invoice, we have the same provisions applicable. So technically, we are violating the provisions of time limit for issuing the invoice. But we cannot say it's an invalid invoice. Though it is raised beyond the law, beyond the time limit. In the law, nowhere it says that beyond the time limit, if the invoice is raised, it is invalid. No such restriction. So yes, there will be penalty for delayed raising of the invoices, but there is no requirement that it becomes an invalid invoice. So what we are suggesting is, if somebody is paying RCM invoices only on recent dates and for previous years, first be clear is that we need to have the self-tax invoice with us. Okay, the self-tax invoice is very important, and the self-tax invoice could be current dated. It could be dated as to 19-20, but actually The liability may be related to, so time of supply has already come. So you have to pay interest, no doubt on that. Interest has to be paid for this period. But it will not affect your eligibility to take credit provided you have raised a self-tax invoice on current date, because that's a valid document we should take in this regard. So this is on the legal side. Okay. Now let's come to the reporting side. Okay. Now when it comes to the reporting side, technically the reverse charge liability supply as regards reverse charge is based on time of supply, and time of supply is based on date of payment. Okay, for reverse charge. So date of payment has already come in 1718 itself. So strictly speaking, we have to report that as part of 1718 transaction because it's already come. Okay, though you are paying it now, the liability to pay has already come in GST R9. So what we said is we are going to report correct turnover in GST R9. So it will be reported in GST R9. So GST R9C, there will not be any question of reconciliation. So 9C will not have anything related, because 9 will capture this information. So 9C technically will not have any information on this, except if there's an interest liability, then that may be captured because of there will be a interest liability component, but otherwise you don't have to report RCM liabilities if it is coming specifically from 9. If it is reported, it is more than enough. It is not required to be reported in 9C, so long it has been reported in 9. So this is what we wanted to clarify in this regard. Okay. So let me just let us give a 5 minutes break now. Post the 5 minutes break, I will continue the session. Meanwhile, if any doubts is there, you may just put it forward.
We will reach in 5:55, sir. Srinivasan, sir.
Sorry, sir.
Fine, sir. Members, thank you for your passion waiting. Our session will be started. Thank you. Srinivasan, sir, you
Yeah.
may take your question. Thank you, sir.
Yeah, thank you, sir. Yeah, so thank you so much for the time. Now let's continue further. So what we were discussing is on ITC side, and in that reversal of, reverse charge mechanism. The first point we suggested is that please take a invoice which is raised current date, so that eligibility to input tax credit will not be lost. Number two is that please ensure that that is properly captured along with the current GST returns, so that the future they will not say that time limit for claiming the credit is lost. And more importantly, the self tax invoice has to be there to ensure that the credit is not lost. Okay, so the government's clarification on this point, reverse charge, says that if it is paid in 1819, eligibility to take ITC. They talk about only eligibility to take ITC. So the liability, so there are two parts. One is liability part, another one is ITC part. Now the liability already come in 1718 itself. Okay, so it has to be reported in 1718. It cannot be part of 1819. But the eligibility part will be only on payment, and because the payment happened for 1718 only in 1819, naturally the eligibility to take ITC will come only in 1819. Okay, so what we wanted to say is that there are two parts to that. So because the liability is related to liability cannot be disclosed in current year's turnover. So GST 9 will not have that. 9C also naturally will not have that. Okay. However, this will come as unreconciled payment, as I told you in the specific heading. It will be coming as an unreconciled payment under the payment segment. So where the unreconciled payment will have to report this particular information. So this is because it is actually related to the previous year. But as regards eligibility to ITC is concerned, the press release is also very clear. It talks about we have to report, take it as ITC only in current year, and naturally it will be part of current year input tax credit only, so not part of the previous year. So I just wanted to highlight where the unreconciled payment is coming. So just yeah. So you can see here the unreconciled payment of amount. This will naturally consist of the RCM paid for the earlier years. ITC part, anyway, it will be part of your ITC itself. So there's no doubt on that particular information, right? Next one is, so that is about the RCM related information. The next, so one is over, point two is done. So point ITC on reverse charge basis, just now we discussed it. And, some more issues. Can I take ITC of, okay, there are some more points we want to say. So there is one of our client, what happened? ITC only. He has forgotten to take on the import of goods. Okay, on import of goods, he didn't take input tax credit. And of course, it was related to 1718. He forgot to take the import of goods input tax credit by March 2019, because the time period for 1718 was till March 2019. He forgot. Can he take the credit today? I mean, he found out only recently that he forgot. Now, by the way, the amount involved is not small amount. It's about 1 crore of rupees. Okay, so can he take the credit in today's date? That was the question. He was asking, sir, can I take the credit in this year? That is, as we are speaking, 2021. Okay. What is your answer? Can I take the credit of the import of goods GST paid of 1718 on today's date? Because normally we know that time limit for taking credit is next year September month due date of filing returns, or the actual date of filing the annual returns, whichever is earlier. Okay. Now in this case, he forgot to take the credit for import of goods, and he found out now. And can he take the credit today? What is your answer? I mean, this is very important. So for disclosure, it's important. So both ways, we just thought we will, discuss this part. So this particular question came up, and then we kind of had to analyze it. So the idea is this: if the input tax rate is related to import of goods, okay, the time of that September month returns of October, due date October 20th or so, or the actual date of filing returns will not apply. Okay. Why? Because that if you look at the time limit, it talks about the time limit is from the date of invoice or debit note. The time limit for taking the credit is calculated as September month of the following financial year, or the date of actual date of filing returns, whichever is earlier, from the date of invoice. Okay, so the valid they should have used the word from the date of valid document. Okay, but instead of using the word valid document, because the valid document includes invoice, debit note, bill of entry, challans, input service distributor invoice, etc. Whereas the definition of instead of using the word valid document, to define the time limit, they said October month from the date of filing the from the date of invoice. The valid document for taking credit for import concerned is not invoice, but rather it is bill of entry. Okay, so as regards bill of entry is concerned, there is no specific time limit mentioned for taking input tax credit. So if there is any input tax credit, even if it is related to 17-18, there is every possibility it can be availed during 2021 also. Time limit of 1 year or that September month will not apply as regards import of goods is concerned, because valid document date is different. Okay, so why we are talking about this point? Number one, it is eligible legally. Now how do we report it? Naturally, it is taken as ITC in the current year, so it will part of your current year ITC itself. Okay, now this is what will come as a reconciliation difference. Okay, in books it might have been ITC in that year itself, or it may not have been recorded as ITC itself, possible. If current year only, the ITC is also recorded in the books as well as in GSTR 3B, no difference will be there. If in books it is already recorded, 3B alone they missed out, then it can continue to be recorded in GSTR. There will be a reconciliation difference between the books and the GSTR 9 returns. That has to be reported as reconciliation difference with valid reason. There's no need for reversal, but it has to be reported as a valid reason. That's, we are trying to say that we are only looking at procedural reconciliation. Here also we are looking at only procedural reconciliation. Whether that credit is eligible or not is a question that has to be decided by the taxpayer. You can advise the taxpayer and ask him to reverse it through DRC 03. Through DRC, GSTR 9C is not warranted. That's what we are trying to say. Another issue we will face 18-18. These are some unique issues which we would not face in 17-18 because of the initial days. Okay, the next issue was on the export realizations. Okay, if there is an export of goods, there is no condition that it has to be realized, though there is a condition for the purpose of duty drawback. You have to realize within the shipping bill date is there some 9 months, extended for 12 months, etc. That is not applicable for GST is concerned. Okay, so if you look at GST, even if you give LUT, the undertaking which we are giving is that for export of goods, I will do the export within 3 months from the date of raising invoice. So it is very clear, for export of goods there is no requirement that money has to be realized. Okay, as regards concerned. Okay, however, as regards the export of services are concerned, one of the condition is that you should realize the foreign exchange. And in the letter of undertaking, it's a very important point. In the LUT, one of the undertaking you are giving is that you will realize the foreign exchange for export of services within 15 days from the end of the 1 year. That's what they are giving, from the end of 1 year from the date of export invoice. You will realize it within 15 days from the end of 1 year. It means 1 year and 15 days is the time they have given within which you will realize. So it means if we are doing audit for 18-19, and if there are export of services of 17-18, let's be very clear. So this is a very important point, because 17-18 you would not have faced this, because this is where another question comes in, is that what is a cutoff period for you to do the audit? Okay, when I say cutoff period, we are doing, let's say we are doing audit for 17-18, that there are some conditions which could have happened after 17-18. Should we consider that for 17-18 audit? We would not have considered it. In my view, many of us would not have considered. When I say what are the conditions, let me give an example. One is this export of service. As I told you, export of goods also. Let's say there was an export happening in March. We would have never checked whether the export has already happened within 3 months from the date of export invoice. I would have raised an export invoice declared in my 3B and 1 because time of supply is raising, you should record. But if you look at the actual export, shipping bill and all might have happened in next month or the next month. We would have never checked whether it happened within 3 months because our cutoff period was March 2018. So many of us might have done our audit with the cutoff period itself as March 18. When I say that, this is one example. I'll give another example. Let's say there was a payment of, invoice payment, supplier payment, 180 days. So about that 180 days condition is backward we are looking at. So we are basically looking at all the invoices outstanding for more than 180 days. As on what date? Is it as on the date of audit or is it as on 31st March 2018 is a question that will arise. So in our view, we have calculated based on the 31st March 2018 as regards reporting is concerned, as regards GSTR 9 is concerned. But as regards audit is concerned, we advise the client, that's part of the audit. So when you advise a client, we anyway ask him to reverse it based on today's date and with the interest till today's date. Okay, but reporting is concerned, it happens based on 31st March 2018. So if there is an export happened, export of service happened in 17-18, but for that the realization has delayed. It was delayed. In fact, we had one client where it happened where they didn't realize the money of export of services within 1 year. This is an issue you will start facing in many cases also. Now, in which case, what the law says is you have basically violated that undertaking of LUT. LUT is one of the undertaking is that you will, realize within 1 year. And if you don't do that, you will pay the tax. If you refer the LUT, that's how it will be. Now, there was a circular given by and there is also a rule is there, which says that if the money could not be realized within the 180 days, there's a circular is there, I think December 2017. And it says that if the money could not be realized within that 1 year, then you have to make a condemnation petition to the commissioner for regularizing that payment. Okay, so it means though this will be part of your audit scope, but rather reporting, nowhere you talk about this reporting, nowhere it will come. Because technically this is, as on 31st March 2019, so what we are talking about is 31st March 2019, when you look backward, it will also, you have to also verify whether 17-18 export of services have been realized properly within 1 year in 18-19. If it is done, it's fine. If it is not done, then whether condemnation to the commissioner has been preferred. Okay. Let's say they realized it later point in time. Very good. Realized later point in time, but again, as per the rule, it has to be condoned. Okay. Otherwise, department can every night come and say you pay GST. And is there any option for refund? By which time 2 years also might have got over. Okay. So this is an important point you look at. It's a very unique point which was not there in 17-18, which will come in 18-19. So this export realization has to be looked at, but from audit perspective only, as regards reporting the same in GSTR 9C, nowhere, only reconciliation differences as getting reported. This is not getting reported in our GSTR 9C, and especially this could be a transaction related to 17-18 and for which realization did not happen in 18-19. Okay, so in which case this can be only an audit point, but not a reporting point as such, because you will not find anywhere getting to be reported, because this will not come as a reconciliation difference itself in the first place. Okay, and this is another issue we might face. Another issue is on job work. Now again, job work also, there was a time of 1 year which was given under the for raw materials, services, goods, etc. 1 year has been given, and for capital goods it is about 3 years. Now again, 17-18 this would not have been an issue because naturally it was only 9 months. Naturally, any job work happened in July 17. First, the earliest date of default can happen only by July 18, correct? Because before that there cannot be any default. I'm talking about default. Okay, that it is not received back. Whether such things are happening, yes, it has happened. Okay, so what we need to see is again, as on 31st March 2019, financial year 18-19 end, 31st March 19, list out all the job works, all the jobs which are outside, which are there with the job worker, and how many days it has been remaining as outstanding, how many days that particular job work is remaining outstanding. For 17-18 you will find a lot of outstanding. Of course, for 18-19 will not find outstanding because naturally everything will be less than 1 year, because April 18 is the earliest date, and April 18 if you start looking at the earliest default would happen only by April 1 2020 April 1 2019, so which is typically next year. Okay, so when you look at cutoff period, as on the last day of the relevant financial year. From that cutoff period, 17-18 job works might be in. So what we are trying to say here is that we are not looking at only about only 18-19 transactions. There are certain continuing effects of previous year which also has to be looked into, and the continuing effects of previous year is one, exports; second is non-payment of invoices within 180 days; third is job work. So job work, what would be the scenario that by March 2019 there are job works which are sent in 17-18 and not returned back within 1 year. So in such cases, what the law says, deemed as a supply right from day one. It means it is deemed as a supply from the day in which it was sent. Again, technically, it's not a supply for the current year. It becomes a supply for that particular year. Okay. So the question is, how do I deal with that transaction? So this is something which again we may have to look into. So it will have to be again reported, because we got, it becomes, though it is deemed as a supply from 17-18, naturally there has to be an invoice to be raised. There will be a delayed invoice to be raised, because we got to know very delayed. Whether such things have happened, yes, it has happened also. So this is a very important point we need to look at. And invoice has to be raised, and it has to be declared in our GSTR1. It's a delayed invoice basically. So there are three consequences that will come. One is it becomes a delayed invoice. What will be the date of that invoice? The next question. You cannot go and backdate it, because that becomes, then law itself is giving you illegal option. It's not possible. So you can only date it on current date when the default is happening. Of course, time of supply happened already. So what would be the possible implications of this? One, there's a delayed invoice for job work, which is now deemed as a supply. There will be a delayed invoice. Fair enough. Can job worker take credit or not? That is an issue separately going on. Let us not get into that. It becomes a little away from the topic. But as regards reporting is concerned, because it becomes a delayed invoice, naturally it has to be reported as part of 18-19 turnover only. So what we need to look at is that, is there any default on job work? And because of the job work default, is there deemed supply is there? And in such cases, whether invoice has been raised or not, if not, it is deemed as a supply, it has to be part of our GSTR 9, and naturally 9C no reporting will be there because it is part of GSTR 9. In 9C it will come. How it will come? Only as a reconciliation between the first serial number, financial turnover, and GSTR 9 turnover. There it will be reported. But in terms of qualification, over it will come, provided it comes in GSTR 9. So this is another important point which we need to look at as regards job work, which would not have been there in 17-18. Another issue which was not there in 17-18, which we may have to look at 18-19, is e-way bill. E-way bill was mandated originally from April 18, and then it was postponed somewhere in June mid. It became mandatory for all. So this e-way bill. So the next question, sir, should I look at e-way bill at all in the first place? Okay, let's say there are 100 transactions and invoice was raised. I mean, invoice was for 100 transactions, more than 50,000. E-way bill was raised only for 50 transactions. What do you think? Should we at all, look into e-way bill as a matter of, as part of audit? Because this is something unique again, which is not there in 17-18, which will come in 18-19. So what do you think? E-way bill should be looked into. See, other issues you have to look into. Export realization, job work. I repeat, as part of audit, you have to look into. As part of reporting, job work will come. Export realization will not come. Yeah, e-way bill issues. What do you think? Should it be, reported or verified as part of our GSTR 9C? Should it be verified? Any person's answers? Because again, these are unique for 18-19, which was not there in 17-18. Okay. So again, if you look at the reporting perspective, there are again two perspectives. One is the audit perspective and the reporting perspective. If you look at the reporting perspective, the reporting perspective only talks about reconciliation again, okay, which is reconciliation between financials and the GSTR 9. So that's what we are reporting. And finally, due to reconciliation, non-reconciliation, our recommendation of the liability. So that's what we are reporting here. Okay. So should I report, let's say there is an e-way bill not raised. Okay. There is a transaction where e-way bill is not raised and value is more than 50,000 rupees, and customer has reached it. In between, the suppliers have not, I mean, it's a practical scenario where department did not, check post, they didn't find out, it didn't basically stopped. somehow it escaped and it reached, because check post is now very limited. So practically the scenario is the taxpayer has raised invoice for 1 lakh. Material movement was there. Customer has reached it. He got the documents, etc. But e-way bill was not there in this. Number one, what is the auditor's responsibility as regards this point is concerned? Any specific answers? Because these are all, again, I repeat, unique for 1819. I'm not sure if we have really looked into all these points, but there is something which we have to see. And I'm sure in departmental audits, they will look at all these points also. Any specific answers for it? So, as regards the audit is concerned, definitely as part of the audit, you have to see audits. When I say if you look at, we are slightly differentiating so it means we are assuming two roles. One is the role of auditor, another is the role of a reporter, reporting person. So as regards reporting concerned, no, absolutely, there's no specific place to report this point. If you look at auditor's recommendation, yes, your report due to non-reconciliation only. And after that, it talks about, the signing being done by the officer. True and correct has now been made true and fair. That and all is fine. But if you look at the overall information, there is a column called observations. You can mention other observations in the GSTR 9C. But again, the other observations are more of where you are clarifying some of the issues which you have made in GSTR 9. If you're clarifying it, and very important point is that please do clarify if there are, for example, if you are reporting that something is reversed or to be reversed, please clearly mention that is it already reversed. If it is already reversed, then which month it is reversed, or which period it is reversed, because this is something which is becoming a big issue in departmental audit. We faced it, as I'm saying that. For example, there was a difference in reconciliation and you reported it as difference. This also has discharged liability. It's better that if before your filing is done, they have already discharged it, please mention very clearly that it has been discharged through so and so DRC03 form, etc. If before if it is already discharged in their GSTR 3B, so I'll tell you one practical scenario. 1819 audit was done by us now, and there was a difference reconciliation, and the assessee has already discharged by himself. He himself voluntarily discharged in 1920. Okay. But because for 1819, this happens to be a difference in reconciliation, what we will say, this is the difference in reconciliation. It might have been reversed. Okay. He might have reversed the input tax credit. I would have 03 separately. So in which case, please mention specifically that it has been reversed in so and so month return, or it has been discharged through this DRC03. Because one of the basic doubt raised by the department is you are reporting as reversed. Has it been reversed? Give me why is it not reported in our GSTR 9C? So it's a very important point that if something is reported as negative, reversed or discharged, please mention the source, and that shows that you have completed the loop. Otherwise, later departmental audit, you will also be called into question. You will also be asked, and naturally your time will be wasted on that, because our fees would have been only for preparing the report and submitting it. But now later departmental audit comes and he asks one more clarification, and you will lose a lot of time on clarifying the department officer after 2 years or 3 years, because you faced this point. I'm just clarifying this to you. Okay, so coming back to the e-way bill issue, no, there is no requirement for reporting specifically in 9C, though it could be an audit point which we may look at along with our overall audit schemes. So this is one thing which I wanted to unique for 1819 and not possible in some. Sir, can the department levy penalty? The next question. See, anyway, the goods have reached the taxpayer. The taxpayer has paid the taxes on it. Customer has received, everything is over. Can the department levy tax? See, if it was caught on way, then they will detain the goods. They will ask you to pay 100% penalty. Can they do that? Yes, powers are there. It is still a transaction without valid documents. Okay, it is still a transaction without a valid document. So naturally, they have powers to levy. So this is a very important point. It is better to inform especially for 1819 is the first year. You will find a lot of gaps on e-way bill in the earlier stages. After the law became mandatory, So it is very important that you identify this issue at your audit level itself and inform the client. Though reporting is not there, as part of audit, it is better to inform the taxpayer so that he is well aware. So it should not become a sudden issue. Okay, I'll tell you one more expectation of the taxpayer is that once we have done the audit and filed the returns, then naturally they assume the entire responsibility is on us. அவர் தான் ஆடிட் பண்ணிட்டாரே முடிஞ்சு போச்சு இனிமேல் நீங்க தான் பாத்துக்கணும். Okay, that's how it happens. The entire responsibility shifts on us. Okay, so and later if the department says no, you have not paid it, the next question the taxpayer will ask is, sir, why have you not told us? Okay, so that would be, so basically they assume that once the audit is done, the responsibility is completely shifted to the auditor from the taxpayer. So it is very important that you look at these aspects. Though it is not getting reported, it is better to raise these points, red flags, at the time of audit itself to the taxpayer, so he's well aware that there could be a potential liability at later point in time on these aspects. And of course, the last point, of course, 8th point is already over. Rate of tax issues when the change in rate is there. Yeah, if there's a change in GST rate, yes, that has to be reported in GSTR 9, and that will naturally be reported as a difference due to, I mean, auditor's liability. Auditor's recommendation on liability is there. There, the rate difference will find a place. So it's not an issue. Point number 10, disclosure of pure agency is another important point. For example, I am claiming reimbursements pure as a pure agent, where I am not liable to charge GST on it. Let's take the example of a clearing forwarding agent. So he is claiming reimbursement of customs duty, let's say 1 crore, and he is charging his own service fees 1 lakh rupees. Now, should he report that 1 crore at all? Not required, because he is not a supplier at all in the first place. Number one, he is not required to report also because it is not his transaction. He is just a pure agent. So it is not even part of the entire scope. So it's not considered for his turnover calculation. It is not considered, it's not part of the value. So not part of the turnover calculation. It is also not required to be reported in GSTR 9. Whether ITC reversal has to be not required because it is just a mere book entry, or I would say financial entry. It has no impact on GST. So if there is a pure agency reimbursements are there, it is not required to be reported anywhere in our GSTR 9 or 9C. So that can be ignored completely. So these are all some of the important points which we may have to look at as regards this year is concerned. So to sum it up, so what we are trying to say, number one, please, the 9C is a reporting tool. So there are two things. Our work is audit, but reporting is restricted to 9C. So as part of audit, we will have to verify everything and give a management report, I would say, to the taxpayer, especially we talked about today on the export realization, job work, e-waybill, non-payment, etc. But as regards reporting is concerned, it is purely the reporting which is arising out of the reconciliation differences. Only that is required to be reported. We need not go beyond that. Especially legal validity of the input tax rate, though can be audited, reporting wise, it is not required to be mentioned. And sometimes they would have already applied refund. Another interesting point, they would have already applied refund, and they would have got partial refund. You have to just report it, that's all. Your responsibility is restricted to reporting there. As part of the GSTR 9C, you can just report that refund that alone can be imported there, but there is of course no requirement to kind of go beyond that. So you are just required to report. Okay, now another point, erroneous refund to be paid back. Okay, so in this case, erroneous refund to be paid back means whether it requires your judgment. Yes, especially if anything is coming under auditor's recommendation. Erroneous refund to be paid back is a question of, let's say you claimed higher refund than actual. You are required to use your judgment and say, is it an erroneous refund or correct refund? So in such cases, it has to be reported. Especially now issues are coming up on the context of time limit. Many people have applied beyond time limit. It will be an obvious case of erroneous refund. Department also has allowed it in many cases. Now they are issuing show cause notice to recover the time limit, time barred refunds. So those are all cases of erroneous refund. If department has already issued a show cause notice, so important point. So we have already replied refund, we got the refund, then show cause notice has been issued already for refund. And in your view, it is definitely an erroneous refund, then you can report it. In your view, it is not an erroneous refund, then naturally you can refrain from reporting from here. It is a matter of litigation which has to be taken. So this is again part of the auditor's recommendation if there is an erroneous refund. and the actual status of refund. Of course, there is a separate segment called status of refund that comes in GST R9 that talks about the actual fact. Here we talk about erroneous refund on the reasons of time barred or any specific reason where you feel legally it's not required to be eligible, but they have given it. And show cause notice has been issued earlier and it is pending. So you have to look at this point. This would not have come again in 1718 because show cause notices are very rare in 1718. 1819 you will find this to be there. Outstanding demands to be settled, that basically represents any tran 1, tran 2 rejections. If anything was there, if it is not yet settled, that can be reported here. And if you think, another interesting point, when I say outstanding demand, it is not about just issue of show cause notice. It is also about confirmed demands. When I say confirmed demands, it means order is passed and DRC 07 has been raised. That means where there's a confirmed demand and the DRC 07 is raised, then you can report the same. When I say outstanding demands to be settled, it at what stage? Is it about appeal is preferred, etc., or is it at just any demand rise, it has to be given. So on a safer side, we would suggest any demand is there can be reported here with a note in the auditor observation saying that the assessee has preferred an appeal against so and so, and hence presently pre-deposit has been paid and no further amount to be paid in this regard. So if that can be mentioned in the outstanding demands, that will be more than enough. This is regards outstanding demands. And erroneous refund is basically, as I told you, where already they have got the refund, but in your view, it's not eligible. So that should be reported for. So that is something which is part of it. Tran 1, Tran 2 credits, rejection is there, any other amounts to be settled. If it is not settled, you can mention it there. And I repeat, you have to see, just because a notice is issued, you don't have to disclose it there. It is only when, in your view, there's a liability, number one. Number two is that there's an order passed, not merely a show cause notice, but cost demanding, it becomes a confirmed liability then. Okay. Now, last a few points as I told about export of services. Department has issued refund for show cause notice has been issued. What is it you are supposed to do? You have to take your judgment on whether it's a valid demand or not, and based on that, you should take a call in this regard. Okay, so that's why I told you reporting is purely based on auditor's view, independent view of the auditor, backed by proper disclosure. It's better that you do that, especially when they already started having litigations on refunds or additional demands, etc. Please look into the case and decide whether it should be reported or not. If you think it should be reported, please also give an observation in the auditor's report saying that, because later that will be a valid ground for the department to say, see, your auditor itself has accepted it. So please give enough observations on wherever any demands is raised. Please give an observation in the auditor's observations, the small space. Please give that observation. These are all some of the points which we wanted to share. So overall, of course, there are some more points. Let me conclude it at this stage. I think whatever time is there. Okay, so we have effectively what we say here is that please keep your scope of reporting to reconciliation differences in 9C. Legal differences, unless specifically called for, especially in the context of that auditor's liability due to non-reconciliation, you are not required to report. That is an audit point, correct? But that had to be informed to the assessee or taxpayer to take an action in this regard. So that's what we wanted to summarize. So on this note, let me conclude my talk in this regard. Thank you so much for the time and also to Balamurugan sir for giving me this opportunity to interact with the members here. Of course, any specific doubts or clarifications is there, we can take it up. Otherwise, we can.
Thank you, sir. Thank you for our elaborate session, detailed session. Members are here requested. Any question is there? Kindly put your question through chat box or raise your hands. I will unmute you. Till now, there is no question, sir.
Maybe later, if any such questions are there, you can forward it.
Definitely, sir. We will forward and getting solution to our members. No issue at all, sir. So I herewith request our secretary G.A. Anand sir to deliver the vote of thanks. Anand sir, kindly unmute yourself.
Yes, sir.
Take the session. Thank you, sir.
So, good evening, everybody. Sir, am I audible?
Yes, sir, you're audible.
Yes, okay.
Yes, sir. You are audible, sir.
Yes, sir. Yes, sir. So, good evening, everyone. On behalf of Erode branch of SIRC of ICAI, I sincerely thank our today's faculty, Mr. T.R Srinivasan, sir, for
Thank you,
his
sir.
valuable presentation on practical issues in GST audit. Thank you very much, sir, for your
Thank you.
valuable input and for your detailed presentation on the above subject. Thank you, sir. And I also
Thank you so
thank
much, sir.
all the members for your meaningful participation in this program and making it a grand success. Thank you very much. I sincerely thank our chairman also. Thank you, sir. Thank you very much.